Good morning, class 12. This one is the last chapter of part B of your accountancy. Cash flow statement. Cash flow statement is a statement showing the changes in a financial position of a business. Business concern during different intervals of time in terms of cash and cash equivalent. The revised accounting standard 3 has made it mandatory for all listed companies to prepare and present a cash flow statement along with other financial statement on annual basis. Cash flows are cash flow are inflow cash flow are inflow and outflow of cash and cash equivalent. It implies movement and movement out of cash and cash equivalent. Objective of cash flow statement. Useful in short term financial planning. Useful in efficient cash management. Cash flow statement helpful in formulation of business policies. Cash flow statement assist in preparation of cash budget. Cash flow statement used for assessment of cash flow from various activities, that is operating, investing and financial activities. Classification of business activity accounting standard require that the changes resulting in flow and outflow of cash and cash equivalent will be classified into following three activities. Number 1, cash flow from operating activities. Number 2, cash flow from investing activities. Number 3, cash flow from financing activities. Next, cash flow from operating activities. Operating activities are the principal revenue productive producing activity of the enterprise and other activities that are not investing or financing activities. Cash flow from investing activities. As per Accounting Standard 3, investing activities are the acquisition and disposal of the long term assets and other investment not included in cash equivalent. Cash flow from investing activities are exhibited as follow. Investing activities included cash inflow and cash outflow. Cash inflow, that is sale of fixed assets, sale of investment, interest received, dividend received, rent received, and cash outflow is represent purchase of fixed assets and purchase of investment activities. Last activity of cash flow from financing activities, which result in change in size and composition of the owner's capital and borrowing of the enterprise from other sources. Now see the question. This question is without adjustment. It's a very simple question for your first stage of cash flow statement. From the following summary of a cash count of X Limited, prepare cash flow statement for the year ended 31st March 2007. In accordance with the AS3 using the direct method, the company does not have any cash equivalent. Summary. Cash account 31st 3 2007. To balance BD equity share to receive from customer to sale of fixed assets by payment of supplies by purchase of fixed assets by overhead expenses by wages, salary, by taxation, by dividend, by receipt of repayment of loan, by balance CD. Now see the solution. First activity is cash flow from operating activity. The first activity is cash flow from operating activity. This sums is in a three stages. One is operating activity, another is investing activities, next one is financing activity. As I said, this sums in three activity: operating activity, cash flow from investing activity, and cash flow from financing activities. In operating activity, the first item is cash from customer, that is 2800. Cash payment to supplier, that is 2000. Cash pay negative 2000. Cash paid for overhead expenses, that's a negative 200. Cash paid for salaries, that is negative 100. When you're paying the cash, your cash is outflow, that's why it's in a negative situation. Now cash flow from investing activities. Whenever you're purchasing, the cash is outflow situation. See, purchase of fixed assets, as it is given in by purchase of fixed assets 200 in your question. Cash from sale of fixed assets is 100. It's an inflow, that is in positive figure. Not net cash used in investing activities, that is negative 100. Number C, cash flow from financing activity, that is issue of equity share 300. Next in repayment of loan, that is negative 300. Payment of dividend, that is negative 50. The sum total is negative 50. Net cash from financing activity negative 50. In a similar way, cash from investing activity is negative 100, and only cash from operating activity 200 is in a positive. The sum total of all the activities, that is 250 minus 100 minus 50, that is 100 in positive situation. Now add cash and cash equivalent opening, that is 50. The sum total of 100 plus 50, that is 150. It is cash and cash equivalent 31st 3 2007. This is similar to your closing balance, that is 150. Cash and cash equivalent 150. Now your solution have been completed. This one is the easy sums without adjustment. I hope you people have understand.